Hello, it's Rob, the ignorant entrepreneur, and the stock market's day of reckoning is just 5 days away. The stock market soared in 2020, defying all expectations after a truly amazing rebound from the coronavirus bear market in February and March. The rebound was brought about by the speed with which some companies shifted gears to adapt to radical changes in the economic and business conditions, as well as the optimism of investors to look beyond the immediate impact of COVID-19 pandemic to foresee a better future. Now 2021 is here, and investors are trying to figure out which direction the stock market will go in the coming year. Bulls are looking forward to deployment of coronavirus vaccines to get the economy back on the full gallop, while bears fear that anything short of a full return to normal could disappoint the markets. Speculation about what the coming months will look like is running from the gambit of euphoric to apocalyptic. Now, earnings reports give investors the truth they need to get past emotional highs and lows and embrace reality. And on Wednesday, January 27th, the stock market will truly have its day of reckoning. On that day, investors will get 3 key earning reports from Apple, Boeing, and Tesla that could send markets soaring or plunging. Boeing will start things off on the morning of the 27th. The aerospace giant is slated to release its fourth quarter results before the opening bell on Wednesday morning, with a webcast and conference call to start at 10:30 a.m. Eastern. From a business perspective, Boeing was in a tailspin all year in 2020. The company originally hoped to have its 737 MAX aircraft flying by the beginning of last year, but it wasn't until December that Boeing finally got the go-ahead from the Federal Aviation Administration to put the plane model back into the air. Even though the aircraft manufacturer got a sizable order from Ryanair, large numbers of cancellations have continued to pour in, largely because the airline industry remains in shambles as a result of travel restrictions and reduced demand. Even before things got better for Boeing, its stock climbed sharply off its lows. After losing more than 70% of its value in March, Boeing more than doubled from its worst levels by the end of the year. That still left the share price far below where it started in 2020, but the current price reflects a lot of optimism for a company that suspended its dividend and could continue to see losses persist in 2021. Investors will watch closely to see what CEO David Calhoun and his team have to say about Boeing's outlook for 2021. If they're not convinced by Calhoun's strategy, then Boeing could hit more turbulence, and the stock market could draw a lot of conclusions about the health of the entire industrial sector. Next, we have Apple. Apple has become the biggest tech stock in the world, with a market capitalization over $2 trillion and climbing. Yet after another meteoric rise in 2020, many investors worry that even a well-deserved praise over the rollout of 5G-enabled iPhone 12s might have sent Apple share prices up too far too quickly. All signs suggest that Apple's fiscal first quarter results, which will come after the closing bell on January 27th, should be strong. Backlog orders for the high-end iPhone 12 Pro remained elevated, even with a 4-figure price tag, and some customers still must wait several weeks in order to receive shipment. That's prompted Apple to boost production volume in the first half of this year, and suppliers have given positive guidance that suggests better times ahead. Apple is also seeing services revenue coming at a healthy clip, as App Store sales hit records during the holiday season. Nevertheless, Apple stock now trades at more than 25 times even the most optimistic forward earning estimates for 2022, which would require 20 to 25% average annual growth rates from fiscal 2020 levels. That's not impossible, but it's ambitious, even from the tailwinds Apple is getting from the product upgrade cycle. Investors will want to hear what CEO Tim Cook and his team have to say at 5 p.m. Eastern on the 27th. Finally, Tesla is slated to release its earnings after the market closes on January 27th. It'll follow up with a live question and answer webcast that starts at 6:30 p.m. Eastern. Tesla stock rose more than 700% in 2020. That has set the stakes high for the electric automaker to keep its growth pace. Investors have already gotten a good idea of what the fourth quarter looked like. Deliveries of more than 180,500 vehicles brought the total for the year to just short of Tesla's 500,000 vehicle goal. Tesla produced almost 180,000 vehicles during the fourth quarter and almost 510,000 for 2020 total. Tesla's earnings report will fill in some blanks though. Net income and free cash flow will give a better picture of how efficiently Tesla is running, along with how big a contribution regulatory credit sales are making to its bottom line. Shareholders also want to know what CEO Elon Musk's vehicle delivery target is for 2021, as well as when to expect new vehicles to become available. What could hurt Tesla going forward, though, is anything short of an extremely optimistic outlook for 2021. Investors have gotten used to seeing strong growth in the core automotive business and also want to see ongoing progress in key areas like autonomous driving, battery technology, and sustainable energy equipment more broadly. If they're disappointed, then Tesla's big run higher could come to an end. There will be plenty of market-moving news in the next 5 days, so it's not as though nothing will happen between now and January 27th. However, if you have to pick one day this earnings season to pay attention to the market, the last Wednesday of January is one to watch. What do you guys think? Let me know in the comments section below. Like, comment, subscribe. This has been The Ignorant Entrepreneur. I'm out.